Welcome back. You're watching opening movie. Okay, if you look at the performance on a Y&Y basis, the net sales were up 4%, almost 4%. PAT, however, has come down by 47% on a year-on-year basis. Let's understand from the management what's the kind of trend they're looking as far as next quarters are concerned. Mr. SATISH JAMDAR is with us. He's the MD at Blue Star Limited. Satish, morning. Welcome to Profit. Can you talk about on the PAT side, what was the clearly the negative for you, which brought down PAT by such a huge margin?
Yeah. Good morning, Harsh. Yeah. You've got to look at the PAT at two levels. One is that if you see our tax rate actually has gone up this year compared to last year. That's because some of the tax benefits that we had in Himachal and other places have expired or come down. After 5 years, they're now down to 30%. That's one thing. The other one, of course, is the PBT itself is down. I need to explain this perhaps in a longer perspective of the whole year. The first 2 quarters, we had a decent growth, 25% coming from after stagnation for a year and a half, and you all know how the economy was behaving at that time. And it is indeed a good thing that growth has come back. That gives us some flexibility to do things different. So the first 2 quarters, in fact, H1, our growth was 25% on the top line. However, our bottom line was marginally below the previous year at the half-year stage, and that was essentially because we had a huge dip in margins. That came from the huge inflationary cost that climbed, in the beginning of the year. And you have to compare it with the base effect of the last year, where things were at their lowest, commodity prices, copper, steel, aluminium, etc. So we were actually, while growing, we were not able to maintain the margins, and so we suffered on the bottom line. Then we made some corrective action, and a good thing I must tell you about this quarter is that the margins have caught up with last year with a series of actions we took. One was, of course, some cost management program that we ran. The other one was looking at segments where what kind of order booking, the quality order booking that we were doing. The third one was, because looking at the inflation costs, we need to be careful of what we are booking. And the third item was we raised prices where we could, about 2 to 3 to 4%, depending on the products. So those are kind of steps we took. On the other hand, we kept some programs going, which we started about a year back to improve the essential Blue Star capabilities going forward, because we look at business growing, we're looking at the economy opening up. It's been a little slower, I must say that. The situation as we saw beginning of the year and right now, inflationary factors, other things are indeed a little more worrisome than they were beginning of the year. But still, I think there is growth going forward. So we are preparing for that. We have programs going on in R&D improvement. We just launched a whole series of products for the residential sector on room air conditioners. That should raise our billing this quarter, fourth quarter, and next year to a large extent. The order book, by the way, is about 2,000 crores in hand right now. So we need to catch up on the billing. So coming back to this quarter, as I said, margins have caught up. The real problem was our billing fell short of what we should have done. We have a fixed cost that we must manage, and the billing growth wasn't, top line growth wasn't in line. It essentially came from cash flows from customers and projects were going slow. Right. And I think the quarter 3, usually we find this is the worst situation for us because it's winter time, air conditioning and others are not perhaps on the shopping list for people. But quarter 4 onwards, we'll start seeing again. Usually quarter 4 is the best for Blue Star, you see, historically. So what we need to do now is catch up on the top line. If we maintain the margin being similar to last year, right, and then I think we have a good quarter coming forward. So indeed, there is a plan that we have to catch up.
Right, Satish, I'll have to leave it at that, but thanks as always for joining us and all the very best for the coming quarter. That's the management at Blue Star talking about the subsequent expectations that they have concerned. That's our management at SpiceJet. Well, that's the time we have on the show, but stay with us. The programming continues here on Profit.